you.
Hello, good morning. Good morning.
Good morning, sir.
Good morning.
Good morning, sir.
Thank you. In our last class, we are talking of trading profit adjustment. So how many questions do we solve in our last class in trading profit adjustment? Last week, how many questions do we solve? Let's solve one more question. Question 6. Question 6. Let's look at question 6. Question 6. Dr. Eniola Ajayi, who resides in Lagos, have been trading for several years with a company name of Eniola Limited. The statement of profit or loss of our business for the year ended December 31st, 2028 is as shown below. Gross profit, 150 million. Profit on sale of vehicle, 1.2. Expenses, general expenses, 3 million. Staff salaries, 62 million, 219,500. Stationaries and printing, postage and telephone, electricity, entertainment, vehicle repairs and maintenance, bank charges, donations, periodic and technical journals, audit and accounting fee, defalcation and embezzlement of funds, repairs and maintenance, depreciation. So we are giving all these expenses. Net profit is 66,200,000. You are provided with the following additional information. You are provided with the following additional information. Legal expenses of 360,000 form part of salary instead of capital items. Donation made to Boy Scout of Nigeria. She agreed with the inspector of taxes that 1/3 of the vehicle repairs and maintenance relate to private use. Further examination of account revealed that salaries of 800,000 was paid to unknown person. The chief accountant perpetrated 75% of the defalcation. Allowable expenses of 230,000 have been omitted from the accounts. Repairs and renewal comprises of partition of new office, repairs to plant and machineries, repairs of office roof, agreed capital allowance on qualified capital expenditures amounted to 17,500. Require compute the tax liability for the relevant year, for the relevant tax year. B, state 3 conditions that must be met before the donation can be allowed as an expenses. So This is what we are asked to do. They are asked to do, the question tells us to compute the tax liability for the relevant year of assessment. So this question, this person, Dr. Niala Ajayi, doing this business, what type of tax is he going to pay on this business? What type of tax? What type of tax is he paying? Dr. Niala Ajayi resides in Lagos, who have been trading for many years. He's trading with which company name?
Eniaje
Limited.
So the word Eniaje Limited, from the profit of this business, is going to pay what type of tax?
CIT.
Company income tax.
Company income tax.
Company income tax. Do you understand? Assuming we are not told he has a company name, that maybe it's a sole proprietorship now. In such instance, we can say she will pay personal income tax.
Income tax, PIT.
But look at the name he's using for business, Eniaje Limited. That means she's going to pay company income tax on that account. So before we can compute the tax liability, we have to get the adjusted profit first. So how do we go? The adjusted profit, by starting from the net profit. The net profit is 66,200,000. So that is the net profit, 66,200,000. We now look at the expenses in the account. The first expenses we have is called general administration expenses. Is it allowed or disallowed? It is allowed.
It's allowed.
General administration expenses is allowed. So far as there is no additional information regarding the general administration expense. Staff salary too. Staff salary is allowed. You can pay your staff salary, is allowed. However, in this question, we have two additional information on the staff salary. One of them is additional information A. They said legal expenses of 360,000 form part of the staff salary instead of capital items. Legal expenses that you're supposed to capitalize, you now put it as part of your staff salary. So what are we going to do to that legal expenses?
Deduct it from salaries.
No, we need to add it back to the net profit as a disallowable expenses. We need to add it back. We need to add it back as a disallowable expenses. We add it back. Yes, we add it back as a disallowable expenses. Why are we doing that? Because it's a capital item. It is not that legal expenses is not allowed. Legal expenses is allowed, but the legal expenses in this regard is paid for capital item, which is supposed to be capitalized. So in such instance, is going to be disallowed. Do we understand?
Yes, sir.
So we disallow that. For me. So we have to disallow the legal expenses. Let me try to open it again. So the question, let me open the material again.
Sir, is this question in our material?
Yes, it's in our material. Okay. So so I can. Now, on the legal expenses, we have to disallow it. So it's part of our disallowable expenses. So now, on the additional information again, there's a particular salary that said further information, further examination of account revealed that
800,000 was paid to a non-person.
you pay salary to an unknown person. Are you going to allow such salary?
No, you add back.
No. So we have to add it back. We have to add it back because it's paid to an unknown person. When salary is paid to an unknown person, you did not mention the person. So it's going to be added back. So we add it back as part of our disallowable expenses. Salary paid to an unknown person. So we have done with salaries. In the expenses again, we have stationaries and printing. Stationaries and printing is allowed. You can pay for stationery, you can pay for printing. It is allowed. Another one, we have postage and telephone. Postage and telephone. Is it allowed or not allowed? It is allowed.
It's allowed.
Electricity. You can pay for your electricity bill for your business now. It's allowed.
It's allowed.
What about entertainment? Entertainment.
It depends on the additional information given.
Thank you very much. Are we giving additional information on entertainment? What is the additional information on entertainment? The question, the examiner did not give us additional information on entertainment. So what do we now do?
It's not allowed.
That means we disallow that entertainment.
Yes.
Do you understand? The
Yes.
only entertainment that is allowed is entertainment of customer. But if the examiner does not state the entertainment, you have to disallow it. You have to disallow the entertainment. So it has to be disallowed. So entertainment will be disallowed. So in my solution here, I did not include entertainment as part of disallowable expenses. I have to correct it. So it has to be disallowed. So entertainment has to be disallowed. So I will open the Excel template. So but let's continue with that. So we have to disallow entertainment. Now, after the entertainment, which one do we have again? Vehicle repairs and maintenance. Vehicle repairs and maintenance. It is allowed. You can repair your vehicle. You can maintain it, provided there is no additional information. Vehicle repairs and maintenance is allowed, provided that there is no additional information. What is the additional information on the vehicle repairs and maintenance?
Additional information.
See, she agreed with the inspector of taxes that 1/3 of vehicle repairs and maintenance relate to what? Private, Abby?
Yes.
So that 1/3 will be disallowed. The 1/3 is going to be disallowed. Is going to be disallowed. The 1/3 is going to be disallowed. So the vehicle repairs and maintenance is 455,000. So 1/3 of that vehicle repairs and maintenance is going to be how much? 151,667.
Somebody's hand is up.
Okay.
Good morning, Mr. Idris.
Good
Please,
morning.
before you move further, I want to ask about that entertainment. What if it is specified that the entertainment is for staffs? You know, those maybe TGIF expenses that companies do.
Entertainment of staff.
Yes.
See, you cannot entertain staff. You can have a staff welfare.
Welfare.
Yes. But
Okay.
the only entertainment allowed under the tax law is entertainment of customers. Do you understand?
Noted.
Entertainment of staff is not allowed. Do you understand? If you want to give staff anything, you can put it under your staff welfare. That one is allowed. Do you understand?
Thank you. Noted.
But you give a staff an item, you call it entertainment. Tax authority will disallow it. The only entertainment they can allow is entertainment of customer. They know if you entertain your customer, it's part of customer relationship. You are, yes. So you are using it to attract more customers. You are using it you want to use that one to generate more revenue. So that one is allowed. Do you understand? So we have done with vehicle repairs and maintenance. Another expenses we have is bank charges. We have expenses of bank charges. Bank charges, is it allowed or disallowed?
Allowed.
It is allowed.
Yes.
We have donation of 450 million. Donation
4.5 million.
4.5 million, sorry. Donation of 4.5 million. Is it allowed or disallowed?
It depends on where it's being
Depends
donated.
on who it was
4.5
donated
million.
to.
Is it allowed or disallowed?
We have
If
to look for
donated to government,
additional information for
allowed.
any information concerning that donation.
It depends on the additional information.
Yes.
So what is the additional information on this donation? Let's go and check. Let's go and check the additional information. So they said additional information
B.
The donation was made to who?
Boy Scouts of Nigeria.
So are we going to allow it or disallow it?
Allow it.
We will allow it. You can donate to Boy Scout of Nigeria, Girls Guide of Nigeria. They are non-governmental organization. Do you understand? They promote security. They promote peace. They encourage youth. So you can donate to them. It is allowed. Once you donate to them, it's allowed. So that donation, we are going to allow it. Donation to Boy Scout of Nigeria is going to be allowed. Do we understand?
Yes.
So it's going to be allowed. So how much is the donation? We allow that. So after the donation, the next one is what? After the donation, we have periodic and technical journals. You buy some journals that your staff will be reading to improve their knowledge, to improve their education. or it can be a business journal. Is it allowed or disallowed?
It's allowed.
Allowed.
It is allowed. You can buy a textbook. Take for instance now, this is tax. You can buy a tax textbook for your accounting staff so that they will be reading, they will understand the new tax law. It is allowed. There's no law that said you should not, they should not go to school again. They should not educate. You can organize a training for them. So it is allowed. Another one we have, audit and accounting fee. Audit and accountancy fee. Is it allowed?
Yes, allowed.
Allowed.
It is allowed.
Yes.
Audit and accounting fee. It is allowed.
Please,
let's
Turn
try
up
to
your
look at our
mic,
audit.
oh. Ah,
Audit and accounting fee. It is allowed. So after the audit and accounting fee, we have defalcation and embezzlement. Is it allowed or disallowed? Defalcation and
Disallowed.
embezzlement.
information.
See, on defalcation and embezzlement, we have to be careful. Before, under the tax law before, they will say, that defalcation and embezzlement, when somebody steal money, staff see embezzle money, company now expense the embezzlement. Do you understand? They now expense it as an expenses. Under the old tax law, defalcation and embezzlement, if it is by junior staff, it is allowed. If it is by senior staff, it is disallowed. But under this new tax law, embezzlement is an embezzlement of fund. It's not an expenses. What are you doing while your staff steal your money? Your staff now steal your 5 million. You now put it in an expenses that you want to write it off. It is not allowed, either by senior staff or by junior staff. Based on this new tax law, defalcation is not allowed. Don't you have an internal control? Do you understand? So it is not allowed. Because in this question, look at what the question said, note E. Look at it. They said the chief accountant, Abi, perpetrated 75% of the defalcation. So what they are thinking is that maybe we can say 75% of it will be disallowed. But based on the new tax law, all the amount is going to be disallowed. All the 1.2 is going to be disallowed. Are we making sense?
Yes, sir.
So we are going to disallow all the 1.2. We disallow it. So go back to the question again. After defalcation and embezzlement, what do we have? What do we have? Repairs and renewals. Is it allowed or disallowed?
Allowed.
Repairs and renewal.
Allowed.
It is allowed, provided we don't have additional information. But we have additional information on repairs and renewal. How much is that repairs and renewal? 85,000, Abi? So they give us they gave us the breakdown of the 85,000. The breakdown was given to us. What is the breakdown? First, partitioning of what?
New office.
New office. Partitioning. Is it allowed or disallowed?
It's disallowed.
Disallowed. New office.
It's a
Disallowed.
capital expenses, not.
It's supposed to be a capital expenditure, renovation cost. It is not allowed. We are going to disallow it. Repairs to plant and machinery. Is it allowed or disallowed?
Allowed.
Allowed.
It is allowed. Repairs of office roof.
It's
Is it
allowed.
allowed or disallowed?
Allowed.
Allowed. Your office roof is leaking. You call somebody that will help you repair it. It is allowed. So the only one I'm going to disallow here is partitioning of new office. I'm coming, I can see your hand. So partitioning of new office. We are going to disallow that one. So what is your question, madam?
Why are we disallowing partitioning of new office?
Because it's a renovation cost. Renovation. When you renovate an office, you're supposed to capitalize it.
Okay, sir.
It's not repair and maintenance.
We add it to the cost of the building.
Yes.
So what if the building is not your own? You just rented the apartment for your business and you renovate it. And you maybe are not going to stay there for a very long time. Maybe after like 6 to 7 months.
See, let me give you an example. You rent an office. If you renovate the office, that renovation cost of that office, though you are not the owner of the office, the renovation cost, you need to capitalize it based on the number of years you are staying in the office. You capitalize it as far as you are staying in that office, so that you are going to depreciate it based on some number of years. So you rent an office now, you spend 25 million to renovate it. You capitalize it. You claim capital allowance on it. Though you are not the owner of the office. That is renovation. It's not repairs. It's not only maybe you are the owner of the building. Renovation cost can be a capital expenditure on its own. So that is what we are saying in this question. Now, depreciation. Are we going to allow it or disallow it?
Disallow.
So we disallow depreciation. We disallow the depreciation. How much is depreciation? 5,010,000. We disallow it. So we disallow it. After depreciation, another expenses we have is VAT paid on equipment. VAT paid on equipment. Is it allowed or disallowed? VAT was paid on equipment. See, paying VAT is not that it's not allowed, but the item you are paying VAT on is what you look at. If you pay VAT on an expenses and that expenses is allowed, the VAT too is allowed. But if you pay VAT on capital item, that VAT will not be allowed. So in this question, VAT paid on equipment, are we going to allow it or disallow it?
Disallow.
Because it's supposed to be capitalized to the cost of the equipment. So we are going to disallow it. VAT paid on equipment. So another one, after the VAT paid on equipment is what? We have bad debts, bad and doubtful debts, specific, 200,000. Is it allowed or disallowed?
Disallowed. The additional information.
No. When I was explaining last week, I said
It's
There are two
allowed.
provisions for
Allowed,
bad debt.
specific is allowed.
Specific provision for bad debt. Which provision for bad debt is disallowed?
General bad debt.
General is
provision.
disallowed. Specific is
General
General.
provision.
Specific
Since
is
this
allowed.
one is
General is allowed.
specific, it's
Yeah.
allowed. It is allowed. Since this one is specific, it is allowed. So specific provision for bad debt is allowed. You should allow specific provision for bad debt. So we are done with the expenses. The additional information. Once you are done with the expenses, you now go to the additional information one by one. Check whether any additional information has not been treated. Additional information A, legal expenses of 360,000 form part of staff salary instead of capital item. That one has been treated. Donation made to Boy Scouts has been treated. Vehicles, 1/3, have been treated. D, staff salary to unknown person has been treated. E, chief accountant perpetrated the defalcation. 75% of the defalcation has been treated. What about F? Allowable expenses of 230,000 have been omitted from the account. Have we treated this?
No.
So how do we treat it in our adjusted profits?
We less it.
We less it. If you remember the format I gave you last week, if you want to compute adjusted profit, I said computation of adjusted profit is net profit add disallowable expenses less non-taxable income. We also less allowable expenses omitted. These allowable expenses, when they are computing that net profit, they omit it in the account. It is not, it does not form part of the net profits. Do you understand? So while we are computing the adjusted profit, we have to less it. It is an allowable expenses omitted. We have to less it in our account. You can see. I bought it, allowable expenses omitted. We have to bracket it, less it from our profit. Do you understand? So it's an allowable expenses omitted. It's not part of the net profit while you are doing your account. So, and it is an allowable expense. In such instance, you have to less it. We have treated all. Now, let's go to the income side of our account, profit and loss account. The income side, we have a gross profit, 150 million. Profit on sale of vehicle, 1.2. Profits on sale of vehicle, is it a taxable income or non-taxable income?
Income.
It's a non-taxable income.
It's a non-taxable income. If you look at the non-taxable income I gave you last week, when you dispose fixed assets, profit on disposal of fixed assets is a non-taxable income. Do you understand? It is part of what I explained to you last week. So if we are computing adjusted profit, you normally less non-taxable income. You will less non-taxable income. So deduct non-taxable income. Profit on sale of fixed asset. Profit on sale of vehicle, 1.2. We deduct it. So we are going to deduct it. So we are finished treating all these questions. All the information has been treated. So what we have left is for us to get our adjusted profits. So for us to get our adjusted profit now, let me share the Excel templates because I've made adjustment to it because of that entertainment. Can we see the Excel template now?
Yes, sir.
So Looking at the Excel template, we have to add all the disallowable expenses together. When you add them together, it's going to give you how much? All the disallowable expenses. 10,302,667. We add it with less non-taxable income, with less allowable expenses omitted. So our net profit, 16,200,000 plus disallowable expenses, 10,302,667 minus 1.2 non-taxable income minus allowable expenses omitted 230. At the end of the day, our adjusted profit will be what? 25,072,667. That is our adjusted profit. From our adjusted profit, you will less what? Capital allowance. Because the examiner say you should compute tax liability. You less capital allowance. In the question, the capital allowance is 7.5 million. Is given to us as part of the additional information. 7.5 million. That is the capital allowance. The capital allowance is 17,500,000, not 7.5 million. 17,500,000. That is the capital allowance. 17,500,000. You less it. Once you less the capital allowance, what do we get?
Taxable profit of 7.5.
So you get taxable profit of what? 7.5 million 72,667. Taxable profit is also, yes.
Sir, I want to call you. This defalcation and embezzlement, you wrote 900,000.
Oh, 900,000. Where did I write 900,000?
Yeah, instead of 1.2.
Why is it like this? No. In my solution, it's 1.2. Why am I? It's 1.2, not 900,000. It's 1.2. It's 1.2. It's not good to be having the different Excel template. It's 1.2, not 900,000.
So the total will be different. Okay, it has reflected.
So this is not what I'm supposed to. Let me share the real. Okay, let me use this. So let me use this. Any other one? Any other one not capture yet?
And I can't see anyone for now.
Okay. So taxable profit is also called total profits. Total profits. Once you get your total profit, what you need to do is to compute your tax liability. Your tax what? Liability. How do you get your tax liability? What kind of tax this company will pay? Tax liability. What kind of tax that they will pay? First, they will pay company income tax. They will pay what?
Company income
what?
Tax. Income tax.
They will pay company income tax. Company income tax, what is the rate of company income tax? At 30 what? 30%. CIT, company income tax at 30%. Company income tax is based on total profits. It's based on what?
Total
profit or taxable profit. You compute company income tax based on percentage of total profit or taxable profit. Do we understand? That means 30% of this. Do we understand? 30% of this. 30% of the total profit. It will give us 2,361,800. Another one. Another type of tax that they will pay. That one is called federal what? Development levy. Federal development what? Levy. What percentage is that?
4%.
4%. That one is based on what profit?
Total profit.
Adjusted profits. It is based on what?
Total adjusted profit.
Adjusted profit. Where is how much is adjusted profit here? 25 million. Abi? It's not based on total profit. It's based on adjusted profit. Do you understand? Hello?
Yes, we
Yes,
are
sir.
following.
Okay. So it is based on adjusted profit. Sorry. So adjusted profit. So 4% of 25,372,667. It will give us 1,014,907. This is what the examiner asked us to do. This is what we are asked to do in this question. So this is what we're asked to do. So tax liability, that is what we're asked to compute. Tax liability. So any question, any observation here? So can we go to personal income
this federal
tax, or
development?
we look at one more question?
Sorry, sir.
Okay. I can hear you.
Was this federal development levy recently imputed to NTA, or it has been in existence?
No, it was just introduced to NTA. Before, we have education tax, tertiary education tax. Do you understand?
Exactly. Yes, sir.
But right now, we don't have tertiary education tax again. Do you understand my point? We don't have tertiary education tax again.
Okay. So it will be calculated on adjusted profit.
Yes. So can we look at one more question on this adjusted profit, or we go to personal income tax straight? Are we okay with this? Or we should look at one more question again?
One more question, sir.
Yes,
Okay.
one more question.
Okay. So let's look at one more question. So today we are going to do the introduction to personal income tax. Let's look at one more question again. So hello. Okay. What is your question? Oyeniyi. What is your question? Okay, let's look at question 5. Question 5. Question 5. Question 5. The following information relate to Agofre Group of Company Limited for the year ended 31st December 2027. They have a turnover of how much? 9.920 million naira. That is the turnover. Turnover of 920 million naira. I'm coming. Is it this one I want to look at? There's a particular one that's, no, don't let us look. Okay, then let's look at question 4. That question 4 is more interested than question 5. Question 4. Question 4. Question 4. The following information relate to New Age Limited, New Age Nigeria Limited for the year ended 31st December 2025. We are giving gross profit. Gross profit is 44,847,000. We are also giving adjusted profit on sale of investment. We are giving that. Profit on sale of investment, 48,000. We are giving dividend received, 1 million. Less other expenses. Audit fee, 70,000. Loan interest, 200,000. Bad debt, 125,000. General expenses, 500,000. Carriage, 200,000. Lighting, 425,000. Salaries, 10 million. Rates, rent and rates, 1.2 million 500. 1,250,000. Repairs and maintenance, 400,000. Staff welfare, 1 million naira. Telephone, 1.5 million naira. We are giving. Motor running, 2.1. Transport, traveling expenses, 1,050,000. Donation, 512. Our net profit in this question is 25 million naira. The following additional information was also made available. Bad debt, that bad debt given to us in the question, they gave us the breakdown. Part of the breakdown is employee loan written off, general provision for bad debt, specific provision for bad debt recover. They also give us general expenses breakdown. The general expenses, what is the breakdown? Sundry expenses are liable. Luncheon vouchers, we are giving. Subscription for trade, 40,000. For social club, 48,000. Printing, 40,000. Legal expenses. Legal expenses consist of lease of new premises, 60,000. Customer claims, 20,000. We now have repairs and maintenance. For the repairs and maintenance, we have decoration of new office, 180,000. Repairs of plants, 50,000. Renovation of factories. Renovation of factories, 170,000. Donation For the donation, we have political parties, 150,000. Donation to ICAN, 250,000. Boy Scout, 63,000. Society for the Blind, 50,000. Capital allowance agreed with the tax authority is what? 1,537,000. The loan interest shown in the profit above is the interest on loan to a friend of one of the management staff. The company turnover is 95 million and the net asset is 450 million. You are required to do what? Compute the adjusted profit. A, the income tax liability for 2026 year of assessment. So they ask for adjusted profit, they ask for tax liability. New Age Limited, they will still pay company income tax and development levy because they are company. So the year ended in this question is 2025. The year ended in this question is 2025. So that means the year of assessment is going to be 2026, preceding year basis. So I want to match the two questions together, both the adjusted profit and tax liability. I call it tax computation for 2026 year of assessment. I will start with my net profit. My net profit in this question is 25 million. Add the salariable expenses. I will now go to the expenses one by one. What are the disallowable expenses? First expenses I have, audit fee. Is it allowed or disallowed? Audit fee. Is it allowed or disallowed?
Allowed.
It's allowed.
It is allowed. It is allowed, provided that we don't have additional information that may disallow it. It is allowed. Loan interest. You pay interest on loan, 200,000. Is it allowed or disallowed? If we don't have additional information on loan interest, we are going to allow it. So in this question, do we have additional information on loan interest? Do we have additional information on loan interest?
Yes, we have.
What is the additional information? That is the last additional information. You can see it is good while you are solving questions. Check information very well. All the additional information, once you have treated them. Once they have been treated, you mark them. Mark. You have treated this, so that anyone is not left. Look at additional information F. Somebody should read that for us again.
The loan interest shown in the profit or loss account is the interest on loan to a friend of one of the management staff of the company.
So, based on that, are we going to allow it or disallow it?
Disallow.
It's a private loan, the personal loan.
It's a private loan. We are going to disallow it. So, based on this, we are going to disallow it. So, that is the reason why we disallow the loan interest, 200,000. If you see loan interest, disallow. So, we have treated that. After the loan interest, what do we have next? Bad debt. Bad debt of how much? 125,000.
125.
Now, let me explain bad debt again for us to understand. we have three types of debts when we talk about bad debts. One is called bad debt written off. Another one is called specific provision for bad debts. Another one is called general provision for bad debts. Do you understand? Those are the three bad debts we have. Bad debt written off is allowed. Specific provision for bad debt is allowed. But general provision for bad debt, is it allowed or disallowed? It is disallowed. Abi?
Yes.
However, in the question, if examiner writes provision for bad debt, they did not state whether it's general or specific. Are we going to allow it or disallow it?
We disallow.
We disallow. We assume it is general provision for bad debt. Looking at this question, they just write bad debt. They do not write provision for bad debt. That means this one is bad debt written off. We're supposed to allow this 125 is bad debt written off. But however, the examiner now give us breakdown of this 125 again. Do you understand?
Mm-hmm.
Yes, the examiner gave us the breakdown of this 125. Since there is a breakdown, we will not allow it. Let's go and check the breakdown. What is the breakdown? Look at the breakdown. Employee loan written up inside the bad debt, 60,000 naira. A loan given to employee, some staff in the, sometimes some company, some staff will collect loan, maybe driver, all those cleaners, security, some of those people that don't value background check. They are not after background check that if I misbehave in my present place, so if I want to get another job, they can go and they will say I should go and bring a letter from where I worked before. Do you understand? Some people don't value that. All this cleaner, security, you understand, driver. So some of them may collect loan. They will see another job. They will just leave that company. They will not even write letter of resignation. They will just abscond. Example of that is this. A loan was given to staff, employee loan. They did not see the staff again. Company now write it off as an expenses. Is it allowed or disallowed?
Disallowed.
It is disallowed. General provision for bad debt. It is disallowed.
Disallowed.
It's disallowed.
What about specific?
Allowed.
Allowed.
Allowed. That means out of these two, which one are we going to, out of the breakdown, we are going to disallow employee loan written off and general provision for bad debt. We are going to disallow them. We are going to disallow them. Employee loan written off, general provision for, so two of them is going to be disallowed. So that is it on bad debt. After the bad debt, we have depreciation. Is it allowed or disallowed? It is disallowed. Depreciation is disallowed. Next is what? The next expenses is general expenses. Are we giving additional information on general expenses? If we are not giving additional information, we can allow general expenses. If we are not giving additional information, we will allow it. But in this question, are we giving additional information?
Yes.
What are the additional information on that? How much is that general expenses? 500,000. They now give us the additional information of that 500. What is the additional information? First, one of them is sundry expenses. They open a bracket, allowable. Are we going to allow it?
Yes, they already say allowable, Abi.
Yes, they already say that. Luncheon voucher. Luncheon voucher. Is it allowed? Luncheon voucher. Is it allowed? It is allowed.
It is allowed.
Luncheon voucher is given to your staff. Some staff, some company, they give staff a lunch voucher to eat. Staff canteen. It's part of staff welfare. It will motivate them to do more job. It is allowed. Under the general expenses too, we have subscription. But the subscription is of two types. They pay subscription for trade, for their business. Is it allowed?
Yes, sir.
They now pay subscription for social club. Social club,
It's
like
allowed.
Ikoyi club.
Disallowed.
Hello? Hello? Hello, can you hear me now?
Yes, we can hear you.
We can hear
Okay,
you, sir.
Yes, the network was bad. So please, the network was bad. So we are on general expenses. We have looked at subscriptions. We have looked at subscriptions. After the subscriptions, still under the general expenses, apart from subscriptions, printing, we have it under the general expenses again. Printing and stationery, is it allowed? Printing. Is it allowed?
It's allowed.
It's allowed.
It is allowed, Abby.
Yes.
It is allowed. Under the general expenses again, we now have a legal cost. The legal cost is two. One of them is lease of new premises. One of them is customer claims. We incur two legal costs. One is for lease of new premises. One is for customer claims. So are we going to allow any of them, or we are going to disallow two of them?
Well, they are legal costs.
The customer claim, I feel it should be allowed, but the lease on new premises is not allowed.
Customer claim is allowed. Lease on new premises disallowed.
Why would disallowing
Lease
lease
on new premises supposed to be capitalized? Capitalized. We're supposed to capitalize the lease of new premises. It is not allowed. So customer
Sir,
claim
I have
is
a
allowed.
question.
Yes, sir.
This lease on new premises
Go ahead, sir.
is okay. Can you hear me?
Yes.
The lease on new premises is not that is, well, with the way I understand the question, it's not that that's the lease they are paying, is a legal cost, right? Probably in preparing the lease or something, lease agreement or something. And you capitalize it.
You are right. If you look at the disallowable expenses I gave you last week, I talk about some legal costs that are disallowed. Can you remember? I talk about some legal costs that are disallowed. I said defense on title to land. Legal costs in respect of defense of title to land is disallowed. Acquisition of new lease is disallowed. Renewal of long-time lease is disallowed.
Okay.
So it's part of what I gave you last week. If you check the list of disallowable expenses, you will see them there. You will see it there.
Okay. Yeah, I've seen it. Thank you, sir.
Okay. So this is what all the general expenses contain. We have treated all the general expenses now that make up 500,000. Now, we have another one, carriage. Another expenses, they call it carriage. Carriage, 200,000. Is this one allowed or disallowed? Carriage.
Yeah.
Allowed.
Can this carriage be a transportation?
Is it carriage inward or outward?
So, my brother, it is allowed. Carriage means carrying costs.
Okay.
Okay.
It is allowed. It is allowed.
So it's the same with
relating to cost of
transportation
transportation,
cost.
it's allowed. Yes, it's allowed. Lighting cost.
Asking if it's the same as Sorry, sir. Somebody is asking if it's the same as transportation costs.
Yeah, but this one is used to carry goods, our good, from the point of the purchase up to the point of our location now.
Okay.
Warehouse.
Okay, sir.
Yes. Lighting means electricity. Is it allowed?
Yes.
Yes, sir.
It's allowed, provided we don't have additional information on it. Lighting, electricity is allowed. Which other one?
Salary and wages.
Salaries and wages. Is it allowed? It is allowed.
Yes.
Provided that there is no additional information. Which other one? Rent and rates.
Rent and rate.
Is it allowed? You can rent office now. It is allowed. Yes. Provided we don't have additional information. Which other one? Repairs and maintenance. It is allowed, provided there is no additional information. But in this question, we have additional information on repairs and maintenance. What is the additional information?
Decoration of new premises. Repairs of plants.
Decoration of new premises. Abi?
Yes, sir.
Repairs of plants. Renovation of old factories. So which one are we now going to follow now? Which one are we going to allow? Which one are we going to disallow?
Decoration of new premises should be allowed.
Allowed. Decoration of
repairs of plants.
Repair of plants disallowed.
Is allowed. Renovation is disallowed.
Allowed.
Repair of plants is disallowed.
Is allowed.
Is allowed. Repairs of plants is allowed. Renovation of old factory should be disallowed.
Okay. So
decoration should be disallowed because it's new premises.
We are decorating.
Yes, now it's part of the cost
it's
of
just renovation. It's part of renovation. I will disallow it. Capitalize it. Do you understand?
Yes, sir.
So two of them will be disallowed. So it will be disallowed.
Please, sir, what do we say about the general expenses? Is it allowed?
They gave us the breakdown of general expenses. We have treated general expenses. They gave us the breakdown.
Okay.
Some of them are allowed, some of them are disallowed. But in a question, they just write general expenses. They do not give you breakdown. You will allow it. Sorry, you are going
Network today is somehow.
Hello, Baba Beji. Ẹ káàárọ̀, màá pè yín padà, mo wà meeting báyìí. Fear, is it allowed?
Fear is allowed.
It is allowed.
So we are
Staff
not
welfare.
We are
seeing
not
your
seeing your
screen
screen,
again.
no.
Okay. Sorry. Staff welfare is allowed.
Yes.
It's allowed. Oh God. Staff welfare is allowed. Telephone and postage.
Allowed.
It is allowed. Motor running expenses.
Allowed.
It's allowed. Traveling expenses.
It's
Allowed.
allowed.
Donation.
To
Depending on the information.
It can be on the information. But the examiner just write donation. They did not put information.
And
What do we do?
you disallow it.
We disallow it. So, but in this question, we are giving the breakdown of the donation. Look at the breakdown. What is the breakdown?
Political parties, not allowed.
Political party, APC. Is it allowed? They are government official now. APC. APC, is it not government?
It's
It's government.
It's a party.
Okay. So
His party is not allowed. You disallow it.
Donation to ICAN.
Is allowed, but let's disallow it, sir.
Allowed.
ICAN building fund is allowed. You can donate to ICAN. They are educational institution. You know, when they donate to ICAN, ICAN can use it to train their members. It's allowed. Boy Scout of Nigeria.
Allowed.
Society for the Blind.
Allowed.
Allowed.
Allowed. So the only donation we can disallow is donation to parties. Donation to political parties. That is the only donation we are going to disallow. Donation to political parties. So we have treated all the disallowable expenses. Like I said, while you are computing adjusted profit, add disallowable expenses, less non-taxable income. You have to look at the income side too in the question. What is the income side?
Profit on sale of investment.
Gross profit, is it a taxable income or non-taxable income?
Gross profit is a non-taxable income. It's
gross profit.
You have
make
to
a gross
now.
profit.
Because
you've not deducted the things you're supposed to deduct from it now.
It's taxable income. Gross profit is taxable. Okay. It's for me that we deduct these expenses now.
Okay.
Profit on sale of investment, is it a taxable income or non-taxable income?
Non-taxable income.
Non-taxable income.
Yes.
So it is non-taxable because it's an asset. Profit on sale of assets is non-taxable. Dividend received, is it a taxable or non-taxable?
Taxable income.
You can't tax it.
Non-taxable income.
It's not
what did I say
dividend
about dividend last week?
You said dividend received will be treated as frank investment.
A frank investment.
So it is non-taxable income. So it's a frank investment income. It is non-taxable income. I mentioned it last week. So two of them are non-taxable. So two of them. So we are going to less these two from our net profit. We treat them as a non-taxable income. We less it. While computing our adjusted profit, we less it. Do you understand? Profit on sale of investment, 48. Dividend, 1,000. Two of them is 1,048. We less it. They are non-taxable income. At the end of the day, when you less it, you are going to get adjusted profit of 26,433. By adding net profit of 25 million, you add to disallowable expenses of 2,481 to it. You now less non-taxable income of 1,048. That is 1,048,000. You less it. You will get adjusted profit. Our adjusted profit is now 26,433,000.
Can we see that summation of the disallowable expenses again, please?
2.481.
From depreciation, when you add, you can add it. Do you understand?
60.
Okay. You can cross-check it.
That bad debt of 110 is not here, is it?
Bad debt is an allowable expenses. It's not here.
60. General provision, 50. 60 plus 50.
110. Okay.
Ruth, what is your question?
Yes, sir. I don't know if we talked about bad debt and recovery before. Please, I'd like you to say something about it.
Okay, let me take you to that back again. Let me explain that again. So let me look at the bad debt. Look at the breakdown of the bad debt. This one is an expenses. Employee loan written off is an expenses. But it's a disallowable expenses. General provision for bad debt is an expenses, but it's a disallowable expenses. Specific provision is an expenses, but it's an allowable expenses. Bad debt recover, you can see it's a bracket. Bad debt recover, is it an expenses or income? Bad debt recover, is it an expenses or income?
It's an income.
You can see they even bracket it. So we don't need it. We cannot go and add it back.
And we don't have to let it either.
Yes. The only thing we need here is which expenses is disallowed among them. Which we have treated already. Do you understand?
So can you take it back to the solution? Solution you did. So we'll compare with our adjusted profit with the one you got.
Okay. This is the
Go
solution.
to the adjusted profit, sir. The adjusted profit. 26,433. Okay. Okay.
Is it correct?
Yes. This capital allowance is in the question.
Yes. Check the question now. Capital allowance. Look at it. Capital allowance of.
Okay, I agree to the tax authority. 1,537,000.
Yes. So we have this. Capital allowance 1,537,000. 1,536,000 or 7.
537.
Oh, that means There's a mistake here. 1,537,000. So I will correct it in the Excel.
Okay, so this one is supposed, the taxable profit is supposed to be 24,896.
896. So you get, when you less your capital allowance, you get taxable profit 24,896. You now compute your tax liability. This is a company. They will pay company income tax. They will pay federal development levy. These are the two types of tax that they will pay. Do you understand? Now, but this question, something unique happened in this question. Oh. Look at the question. See, before we can say a company can pay company income tax, the turnover must not less than how much? You know, under the new tax law, for a company to pay a company income tax, their turnover must be more than how much?
More than from 100 and above now.
100 million and above. Looking at this question, if we just base it, look at this question now. The examiner tells us that the company turnover is how much? There is a particular note. The turnover of the company is 95 million. Does this company will pay tax? They will pay company income tax? Their turnover is 95 million. No. But they will pay. Why? Because their net asset is how much?
450
million.
450 million.
You know, when they are talking of the company that will not pay company income tax, they talk about turnover and net asset. Your net asset, for you to say you are a small company, you will not pay company income tax. You must have a net asset of not less than how much? Okay. Not more than how much?
Million.
Eh? Not more than how much?
Is it
150 million. Your net asset must not more than 150 million.
For you to be exempted from CIT, sir?
Yes.
Okay, 150. So
this company, based on their turnover, they are exempted from CIT. But the reason why they will pay tax is because their net asset is more than what?
150 million.
150 million.
Okay, sir. A question, sir.
Yes.
If in this case now, let's say hypothetically the turnover is 95 million and the net asset is say 140, so they are totally exempted from CIT.
If the turnover is how much?
The turnover still remains this 95 million. The net asset will now be reduced to say 140 million, 145. It's not up to 150. So this company is totally exempted from CIT.
Yes, they are exempted. They are exempted. Since their net
but
asset
not federal
is not,
development levy.
Both company income tax and federal development levy.
Oh, okay.
The net assets must not be more than 250 million, not 150. 250 million. Point of correction is 250 million, not 150. Please.
That was what I said.
Oh, okay.
It's 250 million. Okay. Yes.
Put it down somewhere.
Do you understand? 250 million.
And the 250 million is before the
Sir,
So
sir, I
can
want
you
to
come back
suggest
again
something.
about that, sir?
What do you say?
About
I
the
said I want to.
250 million.
Okay, somebody's okay.
Oh, yeah, just one by one. Oh, yeah,
Okay,
go ahead.
Yes, I just want to say that since if we are reading your notes just for a reminder purpose, under this solution, how about we just put a note or asterisk and just put a small
I
note?
mentioned this under the company income tax. Why I'm doing introduction to tax. In our introduction to tax notes. Yes, it's stated under the company income tax. If you go and check your notes under the company income tax, it's stated there. So, because the net asset of this company is more than 250 million, this company will pay company income tax. So, though their turnover is less than 100 million, they will pay company income tax. So, they will pay any type of company income tax, federal development levy. But if their turnover is less than 100 million and their net asset is less than 250 million, they will not pay any of this tax. So for us to get our company income tax, 30% of the taxable profit, 30% of 24,896. Second one, federal development levy. 4% of what?
4% of
4% of what?
26,433.
Adjusted
Adjusted profit.
4% of 26,433. So that is it on this question. So do we have any query, any observation here? So I think we have tried on adjusted profit, because one or two questions will come out relating to adjusted profit. It can be company. So my colleague, Mr. Wasi, will still talk more on company income tax. Just relax your mind. All those turnover, 100 million, 25 million, there's still a topic you are still going to do, where you are still going to solve more questions on adjusted profit relating to company. My colleague will discuss that, Mr. Wasil. He's still going to take a company income tax. So he will throw more light on the turnover of a company, less than 100 million net asset and so on like that. Do we understand?
Sir, please, I want to confirm this information, how true it is. So,
okay.
He has gone again.
Okay, I can hear you.
Okay, sir. So yesterday, sir, I was hearing that there's one center that was saying that they wrote a letter to ICAN, and ICAN responded that they are still going to test the old law in the November diet. So I don't know how true it is.
It is a lie. It is not true. ICAN have published the new syllabus based on the new tax law. Don't you have the new syllabus? I think the new syllabus was shared to your group now. Based on the new tax law, there's no way ICAN can test the old tax law again. Don't mind anybody that tell you that. They should show you the letter. ICAN is currently working on the study pack based on the new tax law. They are currently working, and they have sent, even ICAN have done justice by sending the new syllabus based on the new tax law. If you check the taxation of the new syllabus, you will see all those new tax law in the new syllabus. So let's forget about the old syllabus. So that one has gone forever. So anybody that is telling you they are still going to, I don't know where they get that. So
Okay, sir.
Okay, thank you. So any question? So we are done with the trading adjusted profit. We are done with that. So our next topic is personal income tax. And this topic can take us 3 weeks. Personal income tax. Personal income tax computation. This topic will take us 3 weeks. It is called personal income tax computation. It's going to take us 3 weeks. So we are going to start by introducing it today. And next week, we continue from where we stop. Personal income tax computation. Let me share it. Last diet, because of the new tax law, ICAN did something funny. Most of the time ICAN set exam, they normally set 20 questions on personal income tax. Do you understand? But the last diet, ICAN did something funny that surprised everybody, which I know that is what ICAN will do. ICAN don't want anybody to blame them that they are still using the old tax law. They don't even set any question on personal income tax at all. And most of the students, they are focused on personal income tax. Though we treated the personal income tax based on the old tax law, and it is the 20 mark of our syllabus, 20%. But ICAN did not set anything on personal income tax. So me too, I was thinking, because ICAN will not want them. If anybody now see ICAN pass question in 2026, they will now see ICAN is still using the old tax law. That is the reason why ICAN have to dodge that bullet. They did not set any question on personal income tax, so that they will not use the old tax rate. So this diet, a question on personal income tax will be tested based on the new tax law, either we like it or not. Most of the students have focused their attention on personal income tax, last diet, but that is how I can behave sometimes. So personal income tax computation for employees and sole traders. Personal income tax computation for employees and sole traders. Personal income tax computation for employees and sole traders. So how do we compute this personal income tax? For those who are in the employment income and those who are doing business, how do we get their personal income tax? So personal income tax, as we all know, is a form of direct tax that deal with taxes of individual, partnership, trustees, executors, communities, and unincorporated entities. The administration of the personal income tax under the new tax law. Personal income tax is regulated under the new tax law, under Nigeria Tax Act 2025. When the new tax law want to talk about personal income tax, the issue of personal income tax was stated under the Nigeria Tax Act 2025. Now, who are the persons liable for personal income tax? Who are the persons liable for personal income tax? Persons liable for personal income tax. Who are the persons liable for personal income tax? What is this now? Persons liable for personal income tax. Number one is what? An individual. Number one is what? An individual. Number two, partners in a partnership business. Number three, communities and families. Number four, trustees. Number five, member of armed forces personnel, such as Nigeria Police Force, Nigeria Army Force, Nigeria Navy. Ladies and gentlemen, member of armed force personnel under the new tax law, this material I'm currently using now, I'm still working on this material to reflect the new tax law. It is based on the new tax law, but I have to make one or two adjustments. So I want to point our attention to one of the changes made to the list of persons liable to personal income tax under the new tax law. Under this new tax law now, member of Nigeria Armed Force, like Nigeria Police, Nigeria Navy, Nigeria Army, they are no more subjected to personal income tax. They are no more paying personal income tax again. These people, they have been exempted from personal income tax. Why this thing is showing like this? I'm coming, oh God. So what we are saying now is under the new tax law, which I'm going to send you the revised material on or before Wednesday, member of Nigeria Armed Force, all these people, they are now exempted from personal income tax. They don't pay tax again. Under the new tax law, they said they are protecting our life. They are the security agency. They are exempted from personal income tax now. They are no more paying personal income tax again under the new tax law. In the old tax law, they are part of person liable to personal income tax. But in the new tax law, they have been completely exempted from personal income tax. They believe that these people, they are the security agency, and they are not earning much income. That why are you taxing them? They are protecting our life and properties. So they are now exempted from tax, from personal income tax. From their employment income, if they have a business, they may pay personal income tax. Another person's liable to personal income tax is officer of Nigeria Foreign Service. Those who work in the Nigeria embassy outside the countries, they are the Nigeria citizen. They work in the Nigeria embassy outside the country. They will pay personal income tax. So, resident of FCT2 is part of the persons liable for personal income tax. Why a non-resident individual too is liable to personal income tax when that non-resident individual have significant economic presence in Nigeria. The word non-resident individual means somebody that does not stay, that is not residing in Nigeria, is not staying in Nigeria. Maybe that person is a Nigerian citizen. He has relocated to Canada. He has relocated to UK. He's working in UK. He's earning income in the UK. That person will pay tax in Nigeria when he have significant what? Economic presence. What does that mean? If your brother that relocate to UK, Canada, is now sending you money to build house in Nigeria, after completing the house, he now rented the house. He has a tenant. From that rental income he's collecting, he's going to pay tax in Nigeria, despite he's not physically present in Nigeria. Do you understand? Under the new tax law, non-resident now, they are specifically stated that they will pay tax in Nigeria so far as they have significant economic presence in Nigeria. That means they have an investment in Nigeria. They have a business in Nigeria, giving them money. On that investment that they have in Nigeria, they will pay tax on it. Do you understand? Do you understand?
Yes, sir.
So these are the list of persons liable to personal income tax. You may be asked, what are the list of persons liable to personal income tax? Resident individual, partnership, partners, communities, families, trustees, resident of FCT, non-resident individuals.
What about residents of Lagos State?
They are resident individual now.
Well, sir,
Resident of any other state.
I was about to ask why do they have to include residents of FCT? What's so special about residents of FCT that they have to include them here?
What is special is that before FCT, you know, FCT is controlled by the federal government.
Yes, sir.
Before, FCT don't have their own internal revenue service. Do you understand? The taxes accrued to FCT is collected by FRS on behalf of FCT. But right now, FCT has their own
FCT IRS.
Yes. Because FCT is not like other states. Do you understand? They said if you are residing in a state, you must pay tax in a state. That state you are residing. Do you understand? Some people can argue to you if they don't include resident of FCT to pay personal income tax. They will say, since they are residing in FCT, FCT is not a state like that. Because FCT don't have a governor, have it?
That's true.
Yes.
That is the reason why they have to include FCT specifically, directly. They have to state it in the law because some people can argue it in the law. I'm residing in FCT. And your law state, if you are residing in a state, is FCT a full-fledged state? So they have to state it categorically.
They want to enjoy the benefits of tax without paying.
So that is the reason why they state it directly. Now, let's look at type of individual under personal income tax. Type of individual under personal income tax. Like I said, there are two types of individual under personal income tax. Resident individual and what? Non-resident individual. Who is a resident individual? A person that domicile or reside in Nigeria for more than 183 days, half of a year. If you are an individual or you are a person, you domicile or you reside in Nigeria for more than 183 days, that means you are a resident individual in Nigeria. Again, a Nigerian citizen serving as a diplomat in other countries. So when you want to define a resident individual, you will say they are the person that domicile in Nigeria for more than 183 days. And a Nigeria citizen serving as a diplomat in a foreign countries. Every Nigeria citizen representing Nigeria in the foreign country, working in the Nigeria embassy, working under Ministry of Foreign Affairs, they now post them on to other countries. They are resident individual. Do you understand? They are resident individual. Are we making sense?
Yes, sir.
Non-resident individual means person that does not stay in Nigeria, does not domicile in Nigeria for more than 183 days, but the person derives income in Nigeria. And a foreign citizen serving as a diplomat in Nigeria. All those, we have a foreign embassy in Nigeria, Abby. All those foreigners working in the foreign embassy in Nigeria, they are non-resident individuals. Some people that don't stay in Nigeria, but they are deriving income in Nigeria, they are non-resident individuals. So, ladies and gentlemen, some non-resident individuals, they will pay tax in Nigeria. Some of them will not pay tax in Nigeria. If you are a non-resident individual, if you earn income in Nigeria, you will pay tax in Nigeria. But if you are a non-resident individual, if you don't earn any income in Nigeria, you don't need to pay tax in Nigeria. In the case of resident individual under the new tax law, resident individual, one of the changes made to resident individual under the new tax law is resident individual is now assessed to tax based on worldwide income. Based on what? Resident individual. They are now assessed to tax in Nigeria based on worldwide income. What do we mean by that? You are staying in Nigeria. You have an investment in UK. And you are staying in Nigeria. You have another investment in Nigeria again. If Nigeria government want to tax you, they will tax you from your income in Nigeria and your what? And your income
from the one
in other countries. Since you stay in Nigeria, resident individual is now assessed to tax on worldwide income. Any of your income, either that income is coming from Nigeria or is coming from any other country, so far as you are a resident individual in Nigeria. Another name for resident individual is called Nigeria resident. Oh.
Hello, sir.
Welcome back, sir.
Okay, thank you. I have to get Wi-Fi. So, because once I receive a call, now, still on this personal income tax. So, resident individual is assessed to tax on their worldwide income. We should know that is one of the changes made to personal income tax. Why non-resident individual is assessed to tax?
We asked
what
a
do you say?
For you. So we asked a question before the network threw you out. So we're asking that what if those businesses that you are that you are doing in other countries, they've already taxed you on those business already, or on the income that you are generating from that those businesses. What if they have taxed you?
You apply for double taxation relief. You apply for double taxation relief on those income. Now, we have looked at resident individual and non-resident individual. Let's talk about the relevant tax authority for personal income tax. Who are the relevant tax authority for personal income tax? The relevant tax authority for personal income tax is the State Internal Revenue Service of the place of residence of the particular taxpayer in the relevant year of assessments. The relevant tax authority of personal income tax is the what? Is the State Internal Revenue Service of the place of residence of a particular taxpayer in the relevant year of assessment. What do we mean by that? That means when we are talking about who are the tax authority that will collect personal income tax, the tax authority of the state where that individual reside, that taxpayer, where does the taxpayer reside? Do you understand? Take for instance now, I reside in Ogun State. I work in Lagos. Who is going to collect my tax? Ogun State Internal Revenue Service. Because personal income tax is based on residential rule. It is not based on income rule. It is not where you derive income you pay your tax to. It is the state you are residing, the state of your residence. That is what that statement is saying. The state of your residence. Irabo, what is your question?
Okay, sir. Payee is a personal income tax, right, sir?
Yes.
Okay, so you just gave a very perfect example now, and I want to ask. Okay, so for say for like Lagos resident, right? There are some people that live in Mowe and the rest, and these are part of Ogun State, and they go to Lagos Island to work. At the end of the month, the various organizations deduct payee. So do you mean that this payee is remitted to the Ogun State Internal Revenue Service and not Lagos Internal Revenue Service, LIRS?
That is the standard. That is what the law say. They're supposed to remit it to Ogun State Internal Revenue Service, not Lagos State. Let's say, for instance, I have a client. My client has a property, a big property in Magboro. Magboro is an Ogun State. And my client works in Lagos State. He has been paying his tax. The company normally deducts his tax, and from his business, normally pay all his tax to Lagos. When my client now wants to obtain certificate C of O in Ogun State, he approached Ogun State government. He wants to collect C of O for his property. He wants to collect all the land documents and so on like that. One of the requirements is provide your tax clearance certificate. Provide your what? Tax clearance certificate. Provide your tax clearance certificate. He was asked to provide the tax clearance certificate. So when he was asked to provide the tax clearance certificate, he showed them the one of Lagos State. When he showed them the one of Lagos, Ogun State has to tell him, okay, all the tax you have been paying in Lagos State, you are just wasting your money. You know, you say you are residing in Ogun State, your address says you are residing in Ogun State. You have to pay us our own tax. You're supposed to write to your employer that your employer should remit your tax to the state of your residence. That man has to pay another tax for 3 years to Ogun State government. It was later I helped him to write a letter to the company where he's working that henceforth they should not remit his tax to Lagos State again. They should start remitting it to Ogun State.
So for the 3 years, the one they've remitted to Lagos State is gone.
Yes, he has to repay because he needs the C of O.
C of O.
Ogun State says you have to repay. They have to give him another assessment.
But what if he has written a letter to Lagos State Internal Revenue for them to give him his tax credit so he can be something like that? Tax credit as well. Because Lagos State Internal Revenue has relationship with Ogun State. You know, it's an issue. So personal income tax is based on place of residential rule. Now, let's talk about place of residence. According to personal income tax, what do we mean by place of residence? In relation to an individual, place of residence means a place available for his domestic use. Place of residence means a place available for his what?
Domestic use.
For his domestic use. For his domestic use. In Nigeria on a relevant day. And it does not include hotel, rest house, or other place at which is temporary lodging, unless no permanent place of residence is available for use on that date. That is how the law defines place of residence. The place that individual is using for his domestic use, that means the place you are putting your family, you are sleeping, you have your belongings, you have your properties. The place that you are using for your rest out. Place of residence does not mean an hotel. Take for instance now, you are staying in Oyo State. You come to Lagos to come and do an assignment. You now stay in an hotel for 1 month. You can't count that hotel as your place of residence. Do you understand? Unless maybe as you are coming to Nigeria, you don't have any permanent place. You just lodge in an hotel. In that regard, we can say that hotel is your place of residence. But when you have a place, a permanent place where you keep your family, where you have your belonging, that permanent place is your place of residence. Do we understand? So, under the tax law, there are 2 types of place of residence an individual can have. An individual can be a single resident. He has 1 place of residence. While some individual, they can have more than 1 place of residence. Dual resident individual. Some people, because they have money, they will build house in Lagos State, build house in Ogun State, build house in Oyo State. Do you understand? All these are large. Some of them can even marry different wives in different locations, have different family. Abi? Such kind of people, they are a dual resident individual. That means they have more than 1 place of residence. Dual resident means when you have more than 1 place of residence. If you are a dual resident, how do we assess you to tax? If you are a dual resident, how we can assess you to tax is for us to discover your principal place of residence. If an individual is a dual resident, we have to discover the individual principal what? Principal place of residence. So how do we get your principal place of residence when you are a dual resident? It depends on the income. If you earn pension income, you only earn pension income. So for us to determine your principal place of residence, it means that your principal place of residence means the place that is the place that the office that pay you pension is located. That would be your principal place of residence. In the case of somebody that earn income other than pension, he earn income from employment. He earn employment income like salaries and wages, and he has a dual residence. His principal place of residence will be the place nearest to his place of work. Out of those 3 places you are residing, which one nearest to your place of work? That will be your principal place of residence. If you are an employee and you have more than one place of residence, you earn employment income. So the principal place of residence will be the place that is nearest. In the case of sources of unearned income, your principal place of residence will be your usual residence. Out of the 3 places, which one do you normally go most? That will be your principal place of residence. Usual residence. In the case of source of unearned income, your principal place of residence is going to be the place that you are using for usual residence. Out of the 3 places, which one do you normally go most? Which one do you normally reside most? That will be your principal place of residence. So we have talked about residence. So ladies and gentlemen, so we can just stop here. By next week, we are going to continue from this personal income tax. We are going to look at basis of assessment of personal income tax. What are the income under personal income tax that will be assessed on preceding year basis? What are the income of personal income tax that will be assessed on actual year basis? What are the income of personal income tax that will be exempted from tax? We are going to look at it. How do we compute personal income tax? All this we look at this by next week. So personal income tax is very important topic to us. Since question did not come out last diet, we should be expecting a lot of questions on personal income tax this diet. So because it contributes 25% of our syllabus. Sometimes it's 20% of our syllabus. So thank you for having me. So do we have any question? Do we have any question?
Yes, please, sir. Sorry.
Okay.
Sir, how do I claim tax credit for okay, for my personal income tax that I've been paying? How do I claim my tax credit? Like the one I've been paying on behalf. Okay, let's say the one that have been deducting from me from my office. How do I get the tax credit?
Tax clearance certificate.
You mean tax clearance certificate? Evidence that show that you have been paying tax up to date, Abi? Tax credit is not tax clearance certificate. Tax credit is different. Okay, explain better.
Let me give you the scenario now. So I have staffs that that we are paying their these things. Okay, we have people that used to sell for us, right? Like they'll make sales for us, make sales for us, and we used to deduct their withholding tax. So one of them now they said that so they said somebody came to us and said that he wants to pay his personal income tax, but the one we have been deducting, he needs the tax credit so he can use it to reduce his own personal income tax that he wants to go and pay. So now we are trying to get him the tax credit, because on the norms, if you are paying, if you are withholding their taxes like that, it's supposed to be showing on their dashboard that you have withholding tax credits, this and that, things like that. So now we used to pay it directly for all of them. Now we don't know how to claim the tax credit for him, so it can reflect on his dashboard that he have tax credits, so he can use it to reduce his own personal income tax that he wants to pay now.
Okay, I understand your question. You have made a mistake at the beginning. Why you want to pay the withholding tax? You have to ask for the taxpayer ID. Anybody you deduct withholding tax from their income, you have to ask for their taxpayer ID. You need to ask for the taxpayer ID.
We have, sir.
Why you are remitting
we have their taxpayer ID. We have their TIN. We use their TIN.
Yes, in this case now, you need to write a letter to LRS. You need to write a letter to LRS. You need to write a letter to LRS.
Okay.
When you write a letter to Lagos State Internal Revenue Service, you tell them the name of the person and the taxpayer ID, and you provide the evidence where you pay the lump sum withholding tax to them that include the name of that person. They will help you generate the tax credit for that person. That person is right. He's a contractor. When you deduct withholding tax on contractor, you must provide evidence that you must give an evidence that you have remitted the withholding tax on your name. Take for instance, now if I render service to your company, if you now deduct withholding tax from the income you're supposed to pay me, you must show me evidence that withholding tax have been paid in my own name, so that I can use it to offset my personal income tax. It is my obligation. It is my right. That person has a right to demand for that from you. So it is now your responsibility to ensure that that person gets the tax credit note, so that he can use it to offset his tax.
Okay.
You have to write a letter to your nearest your company tax station. You write a letter to them.